Yo, quickly this morning, I want to give you some three things that you need to consider before entering into the market this morning so that you stop losing your money. It's high time that we stop losing money in this market. We must start gaining. Guys, quickly, I want to take you through some of the things that I consider before opening a trade. Number one, I check the trend of the market. How do I check the trend of the market? And what do I mean by the trend of the market? The trend of the market is how the market is moving. So first, I open the high time frame, either the daily time frame or the 4H4 frame, which is the 4 hours time frame. So to see whether the market is moving up or the market is moving downwards. So here, if the market is moving downwards, I seek for a position on a lower time frame, either the 15-minute time frame or the 5-minute time frame. There, I look for a position to what? To sell if the market is moving down. There, I will look for a position to sell if the market is moving down. And also, if the market is moving up on a higher time frame, I look for position on the smaller time frame to buy. That's how we go about this thing. If I go over again, if the market is on a high, the first thing I do when I open chart or I open the MT5 or MT4, first thing I do is to check the trend of the market on H4 platform, the H4 chart. I check the trend of the market on a high time frame. If the market is on a bullish move, I seek for position to buy. If the market is on a bearish move, I seek for position to sell. But it doesn't end there. There are other things that I check up to. That takes us to the second point over here, the S and then the R. What does it mean by the S? What do I mean by the S and the R? The S means the support and the R means the resistance. So when I check my trend on the high time frame, I come to the lower time frame, I check my to confirm the trend over there too. Then the next thing I do is that I check my S and R, which means the support and the resistance level. So whenever the market is moving, I make sure I check my X and R. I check my S and R. I check the S and R, which is the support and the resistance. So you can see here, the market has been reacting at this point. It reacts at this point. So now the market is here. So once it breaks, the market, most of the time the market couldn't break at the down here. The market is not able to break and pass this down. But now I could see that the market is moving. So what I'll wait for is that I'll wait for the market to break this line and closes below it, come down, hit it back again. And when it started reversing, then I'll jump into the trade. Or either the market to hit the top here and start going back to the upside. So quickly, when you check your trend, what you have to do next is draw your resistance and then the support lines, levels where price react. You see, price react here, price react here, price react at this level. And when we draw our line, you can see that this price here, they are almost on the same ring, guys. And you're checking out the down here too. You see. So checking the trend, you have to look at this. So once you see this, then you know what to do next. You wait for the price to get to this your support or resistance level before checking or before going into the trade, guys. It's very necessary. Now let's move to the next one, which is the third one. The third thing to consider. Now the third thing to consider is the third confirmation. Yeah, guys, your moving average. We normally most of the time use moving average, guys, to check the trend of the market. So check your trend or the moving average to see whether the market is on oversold level or is at overbought level. This our top line is overbought level, and this our downline is the oversold level, guys. So whenever your moving average moves to the down and crosses it and going back, it means it's at oversold level. So you seek for position to buy, but this you must make sure that is in agreement with your higher time frame trend. Is in agreement with your higher time frame trend. When you on a higher time frame, when you see that the price is on a bullish move and you see your support and resistance level too is also giving you the opportunity to buy, and also you check your moving average to is giving you the opportunity to buy, guys, there you jump into the market and put your stop loss at a good position where you will not risk much of your money. Guys, this is some of the things you have to consider before taking a trade. Number one, check the trend of the market on a higher time frame. H4, see how the market is moving. 2, your support and resistance, check it before you open a position. 3, your moving average or any indicator that you are using, check it well to see whether it's at the overbought level or oversold level before you jump into the market. Guys, consider this and be a profitable trader. I wish you all the best. See you in my next video. Bye bye.